What is going on, everybody? I'm your host, Franz, and this is the Newly Financial Podcast. Today is 12/16/2020, and pretty much we're just going to go over a few financial topics or anything related to investing or that comes to my mind related to that process. But with that being said, I just want to hop right into it today, and let's begin. Alright guys, the first thing I want to talk about here today is the top 7 investing mistakes that the average investor usually ends up making when they first get, involved into investing. So I do have a little article typed up here. I wrote out, it's going to be on my website. It's a couple chapters, it's 7 chapters. It just lists the main things that I did wrong, or the main thing that the most common investors usually do wrong when getting involved into investing. But I just figured I'd read off an article here for you guys so you get the gist of it, and if it's something that interests you, the link's going to be down in the description if you want to check that out. And I'd greatly appreciate it. But here we go. The chapter I'm going to be reading is about your trading strategy, or how you're going to set your portfolio up. I'm just going to read the first chapter, or the first paragraph in the chapter, and then if you guys want to read more, it's going to be free on my website, so feel free to check that out. Like I said, links down in the description. The best and most recommended beginner strategy for investing is the long-term portfolio. The name should be a dead giveaway, as this is the most common and safe investment strategy. This portfolio flourishes with diversification, and the whole time in the market is better than timing the market ideology. I highly recommend this portfolio layout to anyone setting up their first brokerage account or anyone looking for a passive investment or retirement account. This account isn't going to make you rich overnight, but what this portfolio will do is serve as a benchmark for other investment portfolios to build off of each other and give you a fund that you can look back and rely on if need be. A long-term portfolio should have a risk makeup of about 70% safe, 30% risk, or a growth stock. Sorry, I went a little bit off character, but I just wanted you guys to understand that a little better. But back to it. Take advantage of an index fund or ETF and diversify your 70% safe half of your portfolio with no cost to you. So basically, what that first paragraph is trying to tell you is, if you're getting into investing, the best thing to do is find yourself a brokerage. And then right after that, the best thing that you can probably do for yourself is get into an index fund or an ETF, because that in itself already tracks a whole bunch of companies, so you're diversifying your investment basically for free. And if you diversify your investment over multiple index funds, you're getting double, you're hedging yourself against the risk by double the amount. So it's really a good beneficial way to build up a safe portfolio. But guys, if that is something that interests you, like I said, feel free to check that out in the description. I'm trying to grow this website and my social media and all that stuff as big as possible. Check me out on Twitter, TikTok, Instagram, all that other stuff. I'm on there now. LinkedIn too. I'm not on Facebook right now. I've got banned when I was a kid, and I'm not exactly sure why. I'm trying to get that figured out, trying to, figure out what's going on. But the next topic I wanted to talk about here, though, was coming to the Santa rally. We're going to have to be prepared to be extremely bullish, or at least that's what all the big investing companies and corporations are saying. People are expecting the market here, like I said, it's the 16th of December, so we still got half of December to go. And usually in the start of January, February is when the market still rallies a little bit, but there is a crash that usually comes around this time, so I am a little weary. But that doesn't mean that there isn't money to be made, you know what I mean? So we're gonna go over all that stuff here later on to the video today. Stay tuned, stay interested, and let's get the ball rolling here. All right, one of the big things I wanted to talk about here, especially if you guys are involved on this group, Wall Street bets. Jim Cramer finally gave us the credit that we deserve. We've been calling out big plays, and as toxic and whatnot as that community is, they do have a substantial ability to pick out, winning picks in the stock market, or at least with the ability to, meme the stock to go up enough to where you can take a substantial amount of profit. I know a lot of people who have became millionaires through Wall Street bets because of those meme stocks. So it may be a joke, but the money isn't no joke. You can believe that. But yeah, one of the big things that Jim Cramer, if you guys don't know who that is, he's a big CNBC guy. He goes over stocks and all this other stuff usually every day, every couple of weeks, you know what I mean? Like, he has different segments for his channel, but big shout out to him. Check him out if you guys he's known as a boomer, you know what I mean? So he's a little bit more focused on the older investing demographic, but he does have a lot of good knowledge that you guys could pick up from him, and I would definitely recommend checking him out. But yeah, he gave credit to Wall Street Bets, and that pretty much just categorized as a group of like younger investors, and they've been making the market react very, very different than normal here recently. And I don't know if that's because of the introduction of like Robinhood or Webull is another big brokerage that's coming out, but that's really making an influx for a lot of new investors to come into the market, and that's something the stock market has really never seen. And coming into 2020 with technology advancing and a whole new generation of people coming into the market and getting involved into investing, there's definitely some things that are gonna shift and change around, especially with the whole virus and everything. That definitely had a huge impact on speeding up the process of the transition of the big reset is what they're calling it. If you guys haven't noticed here recently, green energy stocks are, they're picking up. Cryptocurrency, we're going to talk about this later on in the video, but Bitcoin hit $21,000. Bitcoin's almost at $22,000. That's insane. A year ago, it was at $9,000, not even $10,000 a coin. So for every coin you owned, you made $10,000 in less than 9 months. That's a pretty substantial profit, if you ask me. One of the big things that I think is affecting, the market and is making all the boomers, you could call it, like get not worried, but they don't really understand how the market's working right now is, the little man or the smaller investors, they're buying these like companies that they like directly. They're not going through these index funds and ETFs, and if they do, it's only a certain percentage of their portfolio. That's what I've been doing. I try to hedge the 70-30% rule, but I do have multiple accounts. If you guys go to my website, look at that 7 trading mistakes list. I have a different types of trading accounts listed on there, so you can figure that out for yourself. But even for the long term, you know what I mean? Like, it's not a bad deal to get into those companies directly, just because you're pretty much building your own ETF. But it's always good to just have a little bit put away in there for a rainy day. That's always what I recommend. So definitely focus on that long term, build that position up as big as possible, have a safe portfolio, and then go out and start messing around with not a mess around portfolio, but something that you can just purchase freely. So you make a little bit of money, you can mess around with it, but if you lose it, it's not gonna kill you. It's not gonna end your world. Definitely keep on track on top of the different fluctuations and trends that are going on here in the market, because there is definitely a substantial amount of opportunities to be taken and make a lot of money, especially if you guys know how to do options contracts. Or I'm going to release a video here soon going over the basics of it, try to help out just average investors and the newer investor. But if you guys know anything about options contracts, that's definitely something you guys should check out, because with how volatile the market is being here recently, I don't know, there's a real chance for you guys to make some big money. Alright guys, moving on into the plays though that I have for this week. Apple is about to hit 138 again, and it's about to pass their all-time high. I believe the last time it was at 130 was like August, start of September, so it's been quite a while. They've kind of traded flat for a long while. Like I said, if you guys know how to trade options, you could trade which could have sold calls or puts during that time and, made some sweet premium. That's what I was doing. I made, almost $1,000 during that month or a couple of months, just, selling premium, collecting that through options. So definitely check that out. The next play that's coming up here is Microsoft is about to hit 220. I'm looking at it right now. It's at 219.40. I'm actually looking at, picking some of this up myself. I'm a little bit disappointed. I had a whole bunch of more shares in my long term, but I actually sold them off at 209 just because I had a pretty big position in Microsoft and I felt a little uncomfortable. I was exceeding my 6% limit per, company or organization, if that makes sense, and that's another one of my rules too. If I am investing directly into a company, I never put more than 6% of that portfolio's net worth into that company, and that always hedges a decent amount of risk. So I will never lose my entire portfolio if I made a bad play. Sometimes I do break this rule just because there are some plays out there that I have made a little bit of extra money on and I had to roll the dice on, but they've all paid off. And those things I would not recommend. I would recommend sticking to the diversifying and all that other stuff. But like I said, moving on to those different strategies and different portfolio types, you can really work with your opportunities and make what happens best for you. So yeah, it's all about what works for you personally. The other big one here today, guys, is Amazon is back up to $3,200 and almost $50 here. So that is a solid resistance point. I would just say keep a lookout on that because it's been down in the dumps for quite a while. If it starts catching steam again, it might be interesting to buy in. If it does start to go on a rally, it's already up like, I don't know, close to $1,000, maybe $2,000 in the last year. It's something pretty insane, but yeah, I would definitely keep a lookout on that. That has me moving on to the next thing here, guys. I would say keep a lookout on all like big cap stocks, FedEx, Baba, Amazon, Apple, Boeing, all the big stocks. Just keep an eye out on them because it really seems like they're starting to pick up steam here, especially with some of the stuff I heard during the Fed meeting with Jerome Powell and all that. So we're going to go over that a little bit very briefly before this is over. But, that definitely is making the market have a little bit of a bullish outlook. So, definitely be optimistic and keep a lookout for that. But yeah, basically today, it's Wednesday. Jerome Powell spoke. If you guys don't know who he is, he's the chairman of the Federal Reserve. And basically, he came on live on the air today to talk about like the market and how the economy is doing. And the stock market actually pumped up pretty high when he started speaking. He had a lot of not necessarily positive news, but it seems like they're working on a stimulus deal and it should be out here very, very soon. And that, that's also a positive thing because, vaccines are also coming out here too. They got shipped out, I think, last Monday, so I mean, things are starting to pick up and turn around. The market's starting to like it. So I would just say, kind of keep your risk hedged back a little bit. Keep a lookout for the volatility in the market because this rally will give you a lot of profits, but you don't know when that black swan's coming. You know what I mean? You could be up 20%, but then in a day lose, 15%. So either way, you're still in the green, but there might be a better buying opportunity or something like that. So, just be precautious and, maybe keep a little bit of cash balance or cash reserve just until maybe the market starts to seem a little less volatile. But, I understand that's very hard to do with, especially what they're doing with the inflation and everything like that. It's making it pretty... They're kind of decentivizing holding a cash balance, which is the whole point of inflation and all that. But, if you can just hold it for a little bit, I guarantee you there will be a pretty nice buying opportunity here. Or, like I said earlier in the video, Bitcoin just hit almost $22,000 and like that is just insane. That is $12,000 profit in 9 months. So I'm actually going to be transferring 10% of my liquid asset, like my liquid assets or my liquid net worth into crypto. So I don't think I'm going to be putting it necessarily into Bitcoin, but I am looking at diversifying my portfolio in crypto. So maybe a little bit of Bitcoin, a little bit of Ethereum, or, I'm not going to invest into any of the sketchy coins just because, that's a guaranteed surefire way to lose money. But anything that's serious or is actually traded as a legit currency, that's definitely something to check out. So yeah, be on the lookout for that. I've also been getting a couple questions on if you are looking at day trading or swing trading, how do I find these stocks to pick throughout the day? Well, basically, the main thing that I've been using is it's a free stock screener. It's called FinViz. You can find resistance and support points on different stocks, or insider trading news, or different volume news, and that's really been helping me out here recently, picking stocks with the biggest movers and stuff like that. But like I said, you have to be very, very careful day trading and swing trading, as those things are very volatile and you have the chance to lose a lot of money if you don't hedge your risk. Alright guys, the last couple things I want to go over here was the FedEx is going to have an earnings report here on 12/17/2020. I'm recording this the day before, so if you guys want to get in on that play, feel free to drop a comment if you are playing that. I think I'm going to hop in on that. FedEx is looking like a really good company. They had a great run up this year, and I really don't see a reason why they would stop, especially, getting these vaccines and shipped. I read an article that, all that stuff's going to be going through FedEx and UPS, and as Christmas just came, or, Black Friday, Cyber Monday, all that stuff just came up. So I really think they're going to have a good quarter, and I would expect them to jump up. So yeah, be on the lookout for that. And last but not least, guys, with the vaccines being distributed, it's only a matter of time before we get back to like a normal society. So I know cases are rising, but hopefully if this vaccine can bring things down to a normal, calm-headed level, things will start to cool down and we'll be good to go from here. Alright guys, I just want to say I really appreciate everyone listening right now, and I know these videos are a little shorter than, a regular actual podcast, but until I can start getting, a consistent viewer base, to be honest with you guys, and honestly, getting people on here to interview and, just have questions or, just talk about on the podcast, that's something that I'm really looking forward to. And I'm just going to keep this going till, just because I like talking about this stuff, honestly, and I like, giving you guys feedback and hearing about what you guys have to say and answering questions about investing. So yeah, guys, I really appreciate you listening and watching this video, and feel free to, like I said, check out the website down in the description, especially if you want that top 7 trading mistakes article. And yeah, be sure to check out my Instagram, Twitter, LinkedIn, TikTok. I'm all on my TikTok. I'm posting daily stock plays. Same with my Twitter and Instagram. So check that stuff out. But yeah, thank you again, guys, and I'll see you in the next one.